Welcome back to the Wyckoff Crypto discussion. In the last 3 months, we have received so many submissions, questions about the Wyckoff methodology and so on. And today's session is totally devoted to your questions. As usual, this information is for educational purpose, is not an investment recommendation. So please stop the video and read the disclaimer. So the first question that we have today, this is a chart by Declan. This is Ripple, and I love the 4 days perspective. It really highlights the big picture. I would label phase A in a different way with the automatic rally on the first big up bar in September 2018, but the general idea of a multi-year downsloping consolidation Ripple makes sense to me, and the last rally has a different quality, is more dynamic. My only concern here is that when you see an asset like Ripple that has been in a multi-year downsloping formation, while so many crypto assets have had spectacular bull runs, the structure itself is warning you that institutions are not accumulating this asset in a very aggressive way. This is not a darling of the crypto space yet. So what do you see here? A clear break of this resistance and some sign of rotation in the market would be a signal. You want to see Ripple outperforming the market before jumping on the bandwagon. And outperformance can happen all of a sudden, but until we see that confirmation, we prefer to stay on the sidelines and focus on other assets. And sometimes an asset looks interesting to our eye just because it's in the oversold zone. But as Wyckoffans, we must go beyond this simple idea. We have to ask ourselves, if this asset is downsloping formation, where is the money going? And so, your opinion, Roman, on this chart?
Yeah, so downsloping, and sometimes, I urge our students, think less about the downsloping trading range and then think more about the downtrend. So in Bitcoin, this bar kind of defined the trading range. The more horizontal trading range was the later COVID shakeout. So it's a little bit easier to see, but only because of that Bitcoin structure that we know, we could kind of say, okay, well, we could try to label here. So I think that, the labeling probably is going to work out once we know the actual outcome. And with that, I always would start thinking, if you are in the downtrend or downslope information, where are the actual signs that people are buying, like institutions are buying? You could see it in the volume signature. So in this area right here, in this area right here as well. And you could see this in the price spread as well. How the buying is going on, how the buying is happening. And it seems that we have had, after the shakeout, they brought it back really quickly. So it does act as a spring, as an action. And then, they're bringing it up again to the value zone where the majority of the time the price was. So this is a positive, but I agree with Alicia that, there is underperformance here, especially to the Bitcoin. And once we have some kind of short-term outperformance in the future, that's when we want to jump in. That's when we will be thinking that this is going to be the asset that now is going to start moving faster and higher.
And I'll tell you a story about this asset. Many crypto traders have a strong emotional attachment to their assets. Discussions are dominated by technical arguments about fundamentals, my crypto is better than yours, and so on. Indeed, this is not what we teach. We must be neutral in this game. And generally, you can observe on the internet a strong debate between long-term holders of Ripple and other crypto investors. Why this happens? Because Ripple has been lagging the market for a couple of years, and generally every time a laggard starts to move up, it means that we are already in the final stage of the buying wave. So long-term holders finally see some movement and they write on Twitter, finally, we're going to break out. We waited this moment for years, but it was worth it. And then the whole market reacts. And this happens over and over. And the ironical thing here is that after so many people has missed the rallies, retail investors lose their faith, and generally that happens when the real rotation is going to happen. And supply is so exhausted after such a long period of inactivity that these assets can move very quickly. And so long-term holders can have their final revenge, but they have been so shaken out that they've sold the asset just before the final move. So this is what has happened to many laggards in the 2017 cycle. So our message here is look at this market with a speculative, opportunistic mindset. And a good way to look for outperformance is the relative strength ratio between repo and Bitcoin. So the last rally here in this chart is interesting, but we need to see a breakout of the base on the relative strength ratio. That will be a very good signal. What do you think, Roman?
Yeah, just relative strength always needs to confirm the price. So even if the price goes up, but the relative is lagging, then it means that it's not going with the pace of our performance. And the relative strength, is something that you could easily analyze as the price structure because it is the price divided by the price. So it is the price. So I like all of these channels that Alessio put in here. Obviously, a break right here would start confirming the break in price. But in itself, this is a really good, indication of strength. So we have a little bit of the supply coming in, but look in comparison to this bar right here, the extension of the result is much more. So it just shows you the ability of the demand to expand the result on the background of the absorption of the supply.
So here, Albert, do you think that the fact that big investors like Paul Tudor Jones and Stanley Druckenmiller have publicly stated that they have positioned Bitcoin is a classical maneuver of the composite man to sell into the strength? Well, this is a very common question. And especially when you are new to the Wyckoff methodology, you start thinking in a contrarian way. But this is too simplistic. And this attitude can easily become a mental trap. And you can have bullish news and massive media coverage both in phase D on accumulation and distribution. For example, this is an historical chart of Chainlink, and we had a very positive bullish news in late June in this chart, and that was bullish. Contrarian were not in the right place. So what I found so valuable about Roman's teaching style is that he stresses the fact that today's market are populated by so many participants, and they analyze in depth their behavior, their patterns, and so on. And these concepts provide not just a better understanding of the structure of the market itself, but also they help us to accept the complexity of trading and manage our emotions. So Roman, I have a question for you. You have been teaching this material for a long time. How many times do you repeat this concept in particular?
Well, I mean, we start our studies with the price cycle, and then we go into the behavioral market analysis. What behavioral market analysis is an understanding of who the market participants are, what their intentions are, what kind of investment and trading strategies, methodologies they use. And if we understand that, then we kind of start understanding how to find their footsteps on the chart. So when we talk about somebody like Soros or, those type of people, you have to question when they come out with their announcement and what kind of announcement that is. So therefore, if they do have a position, and I see, quite a lot of institutional guys sometimes front running, their trades. So they will never say to you that they are accumulating when they are accumulating. They will never say to you that, I'm in this position like right after. They usually tell you this information when they try to get rid of their positions, or at least, to profit take, because they know the weight of their opinion on the public and how it's going to produce, more inflow of money, which is going to allow them to, on the liquidity event, to unload their position. So you have to be cognizant about that. And understand the participants, understand their intentions, understand their maneuvering around the position. So Alessio, I think that our advice here is very simplistic, and that is, yes, look at the news and look how the news is being reflected on the tape, but at the same time, just follow the technical picture, and that would be my advice.
Great. Another question by Tom. And what's the relationship between dollar and Bitcoin? Well, Bitcoin is an alternative asset, is a commodity, and commodities are inversely correlated with dollar. And generally, what we have seen these years is that cryptos love an environment where we have two conditions, a weak dollar and a bullish stock market. And we can see this long-term correlation on these 2-week charts. This is nothing new that I'm adding here. Many great analysts have highlighted this correlation. So we see segments where we see underperformance in red and outperformance in blue. And look at that small trading range that we have on the dollar in the last weeks. It would be very interesting to see an attempt to rally while Bitcoin reacts, for example. But this is a 2-week chart, and these moves take time to develop. What's your view on this, Roman?
Well, first of all, Alessio, I just want to commend you on, bringing to our attention such great charts. Guys, this is something that you have to study, because it's going to give you a little bit of an edge over other traders. Whenever you look at the dollar, and let's say in this area right here, you're seeing this as a potential upthrust above the climactic action of a much, much larger construction here, and then you see the failure here, you're thinking that the dollar is going to go down. So therefore, you go to the Bitcoin and you're thinking that the Bitcoin is going to go up. Now, to me, Alessio, there was another episode where you brought it up and then we've discussed this. It's their ability to understand the character with which Bitcoin is going to move. Because you could clearly see that the Bitcoin here in a more speculative run. Why did that happen? Well, first of all, structurally, you have to understand where the breakout happens, right? So the breakout happens out of a big, larger formation. So therefore, you're going to have some sustainability of the uptrend. The second character here I think is all about this area right here. And Alessio, I wonder what you think about this. The way how I look at this area right here, when the US dollar was going up, and we would be expecting Bitcoin to go down, yet that was not the case. What was Bitcoin doing? It was showing strength.
And that's a further element of strength that's really, really bullish.
Yeah, so this is a very nuanced, a subtle way of showing that strength. And specifically, we've talked about where structurally we're breaking out. But now think about how the price is going to move. Is it going to move fast? Is it going to have deep reactions or not? And this was an effect of this. And as I look further, I'm looking at this rally, Alessio, obviously with the dollar just being flat. So I'm thinking, was that, a potential for us, to kind of see the strength that is coming in the Bitcoin once the distribution in the dollar was kind of known, and more importantly, analog wise, we kind of at this spot, aren't we here? And then this would mean that the dollar might continue going down, and if it does, then Bitcoin is going to break out and it's going to have a different type of character. Alessio, what are your thoughts on that, by the way?
I love this work with correlations. I'm a fan of correlation in the market and very interesting charts.
All right. Okay, PNF.
So 2 questions from Mark about point and figure charts. So first, what software do you use for point and figure charts on cryptos? Well, nowadays there are so many platforms that you can use. Stock charts is great, but we have very small selection of crypto assets there. You can use TradingView, but there's a new platform, gocharting.com, and they've implemented the Wyckoff calculation and percentage scaling for crypto, and it's free. So that's really cool. And the second question from Mark is it possible to count all these monster moves that we see in the crypto world? And my answer is yes. We have shown these techniques applied to cryptos in our special trading crypto markets with the Wyckoff method, which is still available on our website. And just a few weeks ago, I was working on a percentage scaling on Ethereum. It works so well. That said, there are so many nuances in point and figure charting. And especially when you apply all these techniques to cryptos, and I've shown in the past 10% scaling charts of Bitcoin, for example, just a small mistake can generate a wrong count. You have to practice, practice, and practice. And if you're very serious about point and figure charts, Bruce and Roman have conducted so many webinars devoted to PNF charts. They provide tons of case studies. And these PNF webinars are like my best movie that I rewatch over and over. It's so fun, and every time you learn new nuances. Now, it would be easy, too easy to show you today an historical crypto chart with a gigantic move and the PNF count. We have to apply these concepts in real time. So this is a chart of Chainlink. We can't analyze this chart in depth today, but I want to show you just a few ideas. So here we see 10% scaling. This is an extreme scaling. So just a small distraction, a small mistake is amplified into a big one. It's too easy to get huge numbers on this kind of chart. 10 bagger, 100 bagger, and so on. And sometimes when you have this big target in front of you, you are a victim of two emotional responses. You can be excited, and this is a terrible mistake because there's a lot of volatility in this space. And or you can just look at the numbers and be skeptical. But then the market goes up without you on board. So what's the solution here? PNF charts are not used by Wyckoffans just for targets. They are also a great timing tool. PNF charts provide you with a big picture and gives you hint about the timing of a potential reaccumulation. So in this case, the last reaccumulation range still have to be completed. We have to generate more count in order to confirm the second segment of the regional base, which is a very high number. A chart like this already contains itself a kind of trading plan, and the trading plan is always the best way to manage your emotions. And we do not have time to cover this technique in the Wyckoff crypto discussion. We're just 20 minutes here, but I really recommend you to learn PNF charts. And Bruce has more than 40 years of experience with PNF, and we are so grateful to him for teaching us this material with so much passion. So Roman, your remarks here.
Yeah, absolutely go to Bruce's videos. We do have a couple of free videos, the workshops that he did for us, 30 minutes. Those are very basic ones. He explains how to construct the chart, how to take the horizontal count. So check it out on our YouTube channel. And then if you want to go in more depth, then on our website, obviously, in the on-demand section, you could find the PNF specials that you could purchase. There is a lot of technique, obviously, as Alessio has said, and I just want to quickly talk about PNF with those bigger, larger counts. I mean, like you look at 140, you look even at 20 when you are at this price level, and you're thinking like, is it really possible? Well, first of all, in crypto world, you know, a lot is possible. A lot of assets could go up just.
I like this statement, Roman. I really like this statement.
Significantly, because, and I'm always like, it's mind-boggling just to see what the extension of those move, because I primarily study stocks, futures, and cryptos obviously is something that Alessio brings to our attention. So I'm just flabbergasted sometimes, you know, with all of those moves. So what do you do here mentally? You say to yourself that PNF is a guideline. That's number one. A guideline is not a rule. This means that you're following what could happen, but is not necessarily going to happen. Strategy number two, PNF is the convince strategy. It should convince you that there is a campaign going on, that institutions are actually accumulating this asset for a long-term campaign that might last for years. And you've seen this in Bitcoin and other crypto assets where the moves that originated, let's say, in 2019 is still going on after obviously a very prolonged reaccumulation. So I think, you could keep this at the back of your mind, that there are higher targets, and you could trade more tactically, more with the finesse of maybe like selling into the overbought condition and then buying back in the oversold condition, and kind of taking the major swings. And those major swings are going to last also for months and months and months. So you could devise a lot of strategies here just based on this chart alone. All right, let's go further. What's this question?
This is from Tom. So Tom is saying the crypto indexes that your guys are showing are so good, but when I focus on the indexes, and very often I miss many opportunities that are already in the uptrend. So my answer is, this is what happens in the stock market as well. The leaders start to bottom before the index. And once index has completed its structure, the high flyers are already in the first stage of the uptrend. So I think that a good solution here is that you can monitor not just these 4 indexes. You should create a watch list, let's say 10, 15 assets on TradingView, not necessarily the big names, but the movers. And you can go through this list in a couple of minutes every week. For example, assets like Chainlink, Wi-Fi, and so on. These assets give you important clues about the rotation in the market and the whole market itself. So what are your remarks, Roman, about this idea?
Yeah, well, first of all, I understand the sentiment. And sometimes there is this kind of like mental mistake that we make, that we all make or have made before. So, Tom, don't kind of blame yourself for that. This is just where you are in your development. And the key here is to recognize what you're doing. So the fact that you're asking this question already tells me that you're on the correct path. Now, you have to follow up on this question, right? So the mistake that we make, and that is usually we want to time it perfectly, right? So we want to time it right here. Well, maybe here. But then if we don't time it here, and we don't buy it somewhere here, then we feel that we are late. And this is such a trap, because first of all, and I could show you, not in this video, obviously, this is a little bit more extended, but there are multiple points of entry here on all of those reactions, or even on the breakouts, on some of the breakouts that you could use. You just have to create an algorithm where if I'm late, what's the next point of entry for me? And sometimes the next point of entry literally is on the next bar, meaning that if you missed this one, you could still enter on this bar. If you missed this bar, you could enter on the next 2 bars. And this is a daily chart, so you could go on the intraday and start operating right there. Secondly, the second question that comes from students, well, the risk increases, let's say the risk of the initial point of entry to the risk of, let's say, a later point of entry. And therefore, my size is not that as large as I would like it to be. That's also not true. That's also, a little bit of a trap, because if you go to a lower time frame and you enter correctly, and then you switch your position to a higher time frame, which again, a technique that will require much more time, to talk about. So we're not going to cover it today or here in general. So just sign up for the classes. Then with that switch, you could continue with this trade on a higher time frame. So there are remedies to this, and I'm just happy to see that Tom is asking the question, meaning that he's thinking about this. All right.
Great.
Alessio?
Yes, we're done. So,
Okay.
yeah.
Yeah, so we're done for today, and this is kind of like a fun format, Alessia, a Q&A session just alone on its own. And then at the end, I just wanted to ask you, what's your opinion? And obviously, everybody is so interested in Bitcoin. Where are we? So, what are your quick thoughts on Bitcoin?
Well, we still have to see a damage on this chart because supply is coming in. We see that huge supply spike, but the supply has not produced a significant change of behavior yet. So we want to be on our toes here and look for the first sign of deterioration of demand and the first sign of a change of behavior, what supply is able to produce in this market, Roman.
Yes, you're right. So we're looking for supply effect. That's what we're looking for, or supply result, meaning that it needs to start moving the price down where, let's say, the downward swing or downward spread or supply in general are increasing. So that's what we're looking for. Having said this, I think that we should be anticipating a specific behavior. What does it mean? It means that we should be recognizing that, as Alessia has said, supply was on this volume spike. It came in on this bar and it stopped the price moving just temporarily. So think about this spot as kind of like a battle between supply and demand at the same time. So what usually happens after that is exhaustion. And we want to capture this exhaustion because exhaustion still in the very highly momentum driven asset is going to produce some kind of move up where price is going up, but momentum is going down. And therefore volume is going to go down and specifically demand is going to go down. So this creates the condition of change. So I'm thinking that we are somewhat close as we're going into this next bar breakout. We're somewhat close to the top, or maybe we already have had a top. And then what I'm seeing, Alessio, on the next bar right here, on the down bar, is that supply actually increases over the last reaction that we have had, and slight increase in the result as well. So I think that supply already kind of producing the result that we would want to see. Another thing that is of interest to me, just from the tape reading perspective, is the ability of the price, to break out and then to react, right? So on the breakout, what do we have? This type of bar, this type of bar. What kind of breakouts do we have here? Obviously, the latest breakout is not as significant. You could also think about this breakout here and this breakout over, the high. What kind of, extension do we have? And clearly the extension of the breakout is somewhat limited. So that produces, that condition that could become more of the reversal if, as Alessia has said, we have more confirmation to the downside. And obviously, this bar is the most important bar right now. Can we close below? If we do, that's it. Also, I would say pay attention to the trend lines. The trend is well defined here, where we're in the overbought condition. Once the trend is broken, believe me, there's going to be a lot of momentum traders that are going to give up their positions really quickly because they see the same break and they're going to just try to get out as soon as possible and just to secure all of the profits that they have. All right.
And I really like, Roman, the fact that we are not able to push above that 18.5 price resistance there, and that is our kind of target. So of course we have higher targets for Bitcoin in general for this multi-year structure, but that kind of target I think is very significant. And very often in these momentum instruments we can have just a preliminary supply. on that level, on the PNF target. So we have to see. And but I really like the way we can use PNF targets on Bitcoin.
Yeah, we're close, or we already had this stop. Another observation, Alyssa, and I'm just going on the tantrum. Look at this bar and how this reaction is somewhat similar to this bar, stop in action, and then this reaction here. So we are not covering the whole body of this bar here on the reaction, and yet here we are actually making an intraday a low. So there is definitely a different type of movement that we're seeing. Now, if you would say like, okay, well, what about like this argument here? You know, there is a diminished breakout. There is also a low right here. So we have to have this type of action of absorption in this area before the price moves out of this level. So if it's not going to do this, then most likely we could have some kind of correction here. If it holds, then maybe another leg up, continuation, maybe overshooting the PNF target. But a very interesting spot. So it feels like we have to be ready to act one way or another. All right. Well, this is a really great session. I've thoroughly enjoyed this Q&A, and we'll talk to you guys next week.
Thank you very much, Roman.
Thank you, Alicia.